Currently, Chinese banks are facing several challenges, including difficulties in issuing loans, an imbalance between deposits and loans, and excessive business pressures. Even in Beijing and Shanghai, the leading cities, banks are experiencing crises. To meet annual business targets, various banks are launching new preferential policies. Major banks in Wuhan are facing significant challenges in issuing loans, to the extent that even branch managers have to personally negotiate deals. Loan incentive policies have become increasingly aggressive. For instance, if a mortgage has been paid for 1 year with a good credit history, the home loan can be expanded by 100 times. This means if your current monthly mortgage payment is $700, you can borrow $70,000 from the bank. In the final quarter of 2024, bank managers in Beijing were highly anxious. While deposit targets had already been exceeded, loan issuance targets remain far from being met. Depositors put their money into the bank, and the bank has to pay interest every month. However, if loans can't be issued, it means the bank is losing money every month. As a result, major banks in Beijing have lowered their loan interest rates. For instance, Industrial Bank reduced its loan rate from the original 3% to 2.85%. China Merchants Bank dropped its rate from 2.8% to 2.6%, and Jiawan Bank cut its rate directly from 2.7% to 2.5%. Even so, banks are still struggling to meet their loan issuance targets. Currently, as long as a property can be used as collateral, banks are willing to negotiate almost any terms. Even so, major banks are still under immense pressure, and loan issuance volumes remain below expectations. Banks in Shanghai are also facing significant pressure. Many banks in Shanghai are currently facing 4 major pressures. First, as loan interest rates continue to decline, the primary source of bank revenue is steadily shrinking. Currently, deposit interest rates are generally around 2%, while loan interest rates have dropped below 3%, with some as low as 2.5%. Although low-interest loans have slightly increased the volume of loans, bank revenues have decreased instead, leaving banks with a significant lack of momentum for revenue growth. Second, due to the sluggish macroeconomic environment, many businesses are under increased operational pressure, forcing them to scale down operations and reduce investments. This directly results in banks having substantial funds on hand but struggling to find high-quality clients willing to borrow. Third, some businesses are struggling financially and are facing difficulties in repaying their loans, leading to a rising proportion of non-performing loans in banks. Not only do banks need to maintain asset quality, but they must also accelerate the disposal of bad assets to reduce operational pressure. This is undoubtedly a significant challenge. Fourth, as the volume of non-performing loans increases, banks' profitability weakens, forcing them to rely on capital reserves to offset a portion of these bad loans. This places pressure on banks to replenish their capital, particularly for smaller and medium-sized banks, which are hit harder by these challenges. The branch managers at banks in Luan are under significant pressure lately because the lending targets are set very high. But achieving them in practice is extremely difficult. For banks, the only way to generate income is to lend out money. However, the people who truly need loans often have poor credit histories, making it impossible for them to meet the bank's lending standards. Taking farmers' loan as an example, last year the quota for farmers' loans was very tight, making it difficult for farmers to obtain loans. However, this year, as long as the borrower's qualifications are approved, the loan can be arranged immediately. This reflects the significant pressure banks are currently under to meet their targets. Now farmers' loans can reach up to $500,000 with a higher tolerance for credit issues. Approval isn't very strict even if there are multiple violations in the borrower's record. Currently, the requirements for many loan products remain strict. For example, the debt-to-income ratio can't be too high. The number of credit checks shouldn't be excessive, and borrowers can't have taken out more than 4 online or small loans. However, those who can meet these conditions often don't need loans. Many young people are now trapped in the cycle of online loans and smaller loans, facing restricted credit and being unable to access low-interest bank loans. This contradiction makes it difficult for banks to meet their lending targets and further exacerbates the pressure on customer managers. A bank customer manager in Chongqing complained, "When talking business, not only do I often receive a cold reception from customers, sometimes I also have to endure ridicule or even harassment, and yet the task of issuing loans is never completed." A bank employee in Hernan noted, "Many small and micro enterprises can't repay their loans on time. Bank managers are faced with a dilemma. If we don't conduct business, we're reprimanded by our superiors. If we do business and customers can't repay, we face further consequences such as penalties and fines. Due to the severe economic situation, the demand for loans from large enterprises has sharply declined. Many customers' managers have had to shift their focus to the small and micro loan market, where competition is becoming increasingly intense. As a result, numerous banks have been forced to implement layoffs and salary cuts.
这几年武汉银行的日子也不好过。
In recent years, the banking business in Wuhan has also been struggling. The customer managers have been lamenting not only the decline in their salaries, but also in their benefits. One person working at Ping An Bank used to earn several tens of thousands of dollars a year. But since the second half of last year, his monthly income has dropped to less than $300. Yes, you heard that right. It's that little. When I heard the number, I couldn't believe it. Why don't you just change jobs, I asked. He replied, it's hard to find work now. Being at the bank, even though the pay is low, at least I can still have a stable social insurance and housing fund. When he said these words, he looked very helpless, and at the same time, he was hoping for a recovery in the banking industry. Bank jobs were once considered very respectable, but now, with a monthly income of around $300, how can anyone live a good life? Add to the mortgage payments, car loans, school fees for the kids, and daily household expenses, life becomes even more challenging, and even getting sick becomes a luxury. Based on relevant data, in 2023, the average salary for the 6 major state-owned banks in China exceeded $40,000, with 5 banks experiencing an increase from 2022. The only exception was China Construction Bank, where the average salary saw a significant decline. According to statistics from mainland media, in the first half of 2024, the total number of employees at the 42 listed banks decreased by approximately 38,000 people. Additionally, the average monthly salary decreased year on year at 30 of these banks. In the banking industry, what were once high-paying positions now have average monthly salaries of less than $1,400. In addition, China's recent economic slowdown and the spread of the real estate crisis have had a severe impact on the banking industry, facing unprecedented challenges. In recent years, the wave of closures among commercial bank branches across China has continued to intensify. According to the National Financial Regulatory Authority's financial license information, since 2024, 2,681 financial institutions in the banking sector have exited the market. This includes 2,057 commercial bank branches involving various institutions such as state-owned banks, joint stock banks, city commercial banks, and rural commercial banks. As of late September this year, more than 260 small and medium-sized banks have undergone mergers and reorganizations, and some of them are even at risk of closure. And news in November indicated that 10 more banks were to be dissolved. Another 10 banks are set to dissolve. What should depositors do? By the end of this month, the financial regulatory authorities have already released a list of 10 rural banks set to dissolve, with 6 of them located in Hebei province. Since the beginning of this year, the number of small and medium-sized financial institutions that were acquired, then merged, dissolved, or converted into branches has far exceeded last year's numbers, totaling over 260 banks. The banks most likely to be dissolved are often the small and medium-sized ones, especially rural banks and rural credit unions. These banks are typically small in scale and weak in strength, making it difficult for them to compete in the market. Depositors need to pay close attention to the operational status of these institutions if they choose to keep their money there. The second category of high-risk banks are those taken over by regulatory authorities due to the misconduct of major shareholders or fund embezzlement. In these cases, not only could the major shareholders or management engage in fraudulent activities, but even bank managers themselves might manipulate funds, leading to risks for depositors. For example, some depositors trusting bank managers' recommendations directly deposited money into their personal accounts, only to find years later that they couldn't withdraw a single penny. When a bank dissolves, there are usually 2 main ways the deposits are handled. One is that if the bank dissolves and enters into bankruptcy liquidation, depositors' funds are typically protected by deposit insurance. According to the policy, deposits up to $68,800 are fully covered by the deposit insurance. However, for amounts exceeding $68,800, depositors will need to wait until the bank's bankruptcy liquidation is completed for distribution. If the bank's assets are insufficient to cover the debts, those with deposits exceeding $68,800 may only receive a portion of their money back, or in some cases, none at all. The other scenario is when the dissolved bank is restructured and taken over by another bank. In this case, depositors' funds and interest will be managed by the new bank resulting from the restructuring. This method is relatively safer since the new bank typically has stronger financial resources, ensuring that deposits are mostly protected. Depositors should aim to choose banks with better qualifications to safeguard their funds, avoiding excessive deposits in rural banks or rural credit cooperatives with higher risks. In 2024, the number of small and medium-sized banks acquired or merged within Hebei province reached 31, making it second only to Liaoning province nationwide. Some commentators believe that China's economy is entering a full-scale crisis due to issues such as inflation, corruption, foreign investment withdrawal, industrial chain shifts, and the collapse of small and medium-sized enterprises. Banks in China are under absolute government control. In a weakening economy, banks are unable to effectively support public demand. Currently, banks themselves are struggling to survive, and the difficulties faced by ordinary citizens and small and medium-sized enterprises are becoming more severe. The systemic collapse of the Chinese economy is accelerating. Commentator Cheng Xiaolong pointed out two prominent features of the Chinese banking sector. First, the dominance of the large state-owned banks, and second, the government's control over these banks, reflecting the monopolistic nature of the socialist system. This structure is bound to have long-term impacts on the development of the banking industry. Currently, the Chinese banking sector is still dominated by the big 6 state-owned banks, 12 joint stock banks, and 125 city commercial banks. These city commercial banks hold approximately 16% of the total assets in the banking sector, while the big 6 state-owned banks control 60 to 70% of the market share, thus playing a dominant role in providing financial support to the Chinese economy. Although these major banks are publicly listed and have absorbed some private investment, the government or state-owned financial institutions still hold the vast majority of the shares. For example, in the shareholder structure of the Industrial and Commercial Bank of China, ICBC, a combination of Central Huijin Company, the Ministry of Finance, and National Social Security Fund collectively holds over 70% of the shares. Central Huijin Company, acting as an investment institution for government-managed foreign exchange reserves, is the largest shareholder of ICBC. As you can see, it's clear that China doesn't have truly independent commercial banks. Regardless of their size, almost all banks are government-controlled, with the government holding a dominant position. Senior management in these banks is appointed by the government and serves governmental needs. When the government requires funds, banks must provide it, and if the government doesn't repay on time, banks have no recourse. The major banks are directly controlled by the central government, while city commercial banks are managed by local governments. This level of government constraint is one of the main factors preventing healthy development in the banking industry.